Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisor and your host for Upticks. Today is our 64th episode, fourth quarter tax planning. All right, Matt. Welcome back onto the show.
Thank you. I'm excited to be here.
Obviously, with taxes coming, or the end of the year coming, and taxes a high priority for people, we thought we'd bring you back on the show to talk about some tips for our listeners and our viewers, the ways that we can lower their taxes before year end.
Very exciting. Great.
Also, I want to give a shout out, congrats to Corey and Cassie. I went to their wedding this past Saturday at the Carriage Club, and it was a fantastic event. And he's in Costa Rica right now, and while you and I are working.
Hanging out on the beach.
Yeah, exactly. So good for him. We want to wish him, a very happy and healthy wedding, or I guess marriage, and congratulate him again. And please forgive me for my casual attire. I'm going to go play golf right after this.
Sweet.
Why not? Matt, you can hold the fort down.
Sounds good.
Okay, so the topic of today's show is fourth quarter tax planning, and a big misconception that I think a lot of people get out there is they don't want to start thinking about their taxes until March or April. Mm-hmm. Well, at that point, if you're looking at 2019 and you're doing this in 2020, it's too late. The damage is done.
It is over.
Yeah, and there's not a lot you can do. I mean, there's some small things you can do to try to help mitigate some things, but the vast majority of your potential tax savings or lowering it's already happened. Mm-hmm. And so we think it's very important that you engage with your CPA now in the fourth quarter, really for two reasons. One, it's before year end, so there is something you can do. Mm-hmm. And two, your accountant's probably going to have a good idea of your projected income for the year. So if you are going to qualify to exceed the standard deduction, or if you have more money to put in your 401k, or all the different things that we're going to talk about, your CPA can give you some good advice as to how to lower your taxes before it's too late.
Definitely.
Right. So that's why I'm glad everyone that's viewing this or clicked onto it. Hopefully you're watching this before year end. We're filming this in October, so we want to give you plenty of time to make some adjustments. And you and I, Matt, wanted to go over 5 things that people can do today to lower their taxes for 2019.
We sure do.
All right. So I'll kick us off. So number 1 would be to check your retirement plan contributions. Many of our clients work at companies that have 401ks, and if you're saving in a 401k plan, you can give $19,000 a year pre-tax, and if you're over the age of 50, you can actually give an additional $6,000. So that's $25,000 that you could potentially knock off your taxes. So all you need to do is you go into your 401k plan online, or you call them up, and you say, how much have I contributed this year? How much am I projected to contribute? And if you have some extra cash or want to make some adjustments, you certainly can do that to lower your taxes. Part of our services at Falcon Wealth Advisors, we'll do that with you. So for our clients, they don't have to do that on their own. We're happy to make that phone call or come into our office and help log in with you and double check that.
Yeah.
Am I missing anything there?
I was just going to add that it's especially beneficial to those people who may be on the cusp of a certain tax rate. For instance, if you were a few $1,000s short or over,
a bracket,
you could potentially lower your tax bracket and stay in that lower tax bracket by additionally or contributing more to your retirement program than you had planned in already. So something to go back and check in and see what you're going to be contributing to for the total year, and looking at what your projected income is going to be, and potentially seeing, can I stay in that lower tax bracket?
Yeah, absolutely. And you want to do this now, in my opinion, because I think a lot of 401ks won't allow you just to write a check. So you typically have to do it through a payroll deduction. So if you need to go in there and maybe you're saving 5% or 10% and you want to crank that up to 20%, you want to give yourself enough time to hit some pay cycles so that you're putting more money in there. And obviously you would want to have money set aside in your checking or savings account, because if you're going to get a lower paycheck, you want to be able to budget for that accordingly. But you're right. If you're on the bracket borders and you can knock yourself down one, could be potentially huge on some other taxes that you could be paying. So a no-brainer, check those retirement contributions. Obviously, if you can't afford to put more money in there, that's fine. But if you do have some money built up in your savings or your checking and you can afford to max those out, certainly something that's easy to do that can knock you down into a lower bracket.
Yeah, definitely beneficial.
Perfect. So that's number one. Number two, Matt, what do you have for us?
The second topic that we're going to discuss today for tax planning is going to be what we call bunching, or potentially utilizing what we call a donor advice fund. And so typically what the general trend has been is a popularity in these donor advised funds once the tax rates or the tax brackets have all changed with all this tax change. So the reason for that is the standard deduction, as most people know, has risen. So for a married couple, it's $24,400 for the standard deduction.
Right, which is pretty high for most people. I mean, they don't typically have a lot of deductions above and beyond that.
Correct. So two of the biggest things that are potentially that people are looking at itemizing are their mortgage interest and then their charitable deductions. Well, typically we know what our mortgage interest for the year is going to be.
Right.
But what we can do to change that itemized number is our charitable contributions, right? And so if we are looking at what are we contributing to charitable donations every year and what is that value, we can potentially looking at upping that number. So we might take, instead of just 1 year's contributions, we might contribute 3 years of what we plan to give into what's called a donor advised fund. Now, when you put those funds into the donor advised fund, that doesn't necessarily mean you're going to give all that to charity that day. So you have the opportunity to continue to give at your regular increments, but the funds are going to be inside of that donor advised fund, and then you're going to be able to receive the same tax deduction as if you had donated them to the charity. So essentially, the whole goal is to raise your itemized deductions above your standard deduction.
Exactly. So let's just play out a quick scenario. So if me and my wife, we add up all of our deductions before we donate to charity, and let's say we're at $22,000, right? And we're going to give $2,000 to a church. We wouldn't be able to write any of that off, right?
Just short.
Yeah, because we're underneath it.
Yeah.
But if we went ahead and put $5,000 in this donor advised fund, or $10,000, or whatever we could afford, whatever was above and beyond the 24.4, we could go ahead and deduct, right? So that's the whole idea with bunching, is that you want to use it if you're close to being over that standard deduction to go ahead and push you over, so that you can get the full charitable deduction on your charity or donor advised fund contributions. And that's the whole idea. Now, this is
correct.
Somewhat of a little bit more complex of a topic. So Matt, I know you've written extensively about this. So certainly if you want more information, you can go out to falconwealthadvisors.com under our blog or content section and just search the blogs for Matt's blog on donor advised funds.
Yes, lots of great information out there with the blogs, and obviously if you have any questions, you can also follow up with us as well.
Yeah, so bunching together your charitable donations in 1 year lets you get the full deduction, and then again you can dish them out as you see fit.
Yeah,
Perfect.
Great.
All right, another one that I wanted to talk about, so number 3 would be health savings accounts. So if you do have a high deductible plan as far as your health insurance is concerned, health savings accounts can potentially be triple tax-free. So the idea is you get a deduction by putting money in there. The money grows tax-free if they let you invest it, and then if you use it for qualified medical expenses, you don't pay any taxes on it. So a big deal, if your company offers a health savings account, we certainly would want to make sure that you're taking advantage of that and go ahead and putting money in there. Even if you don't think you're going to need it, right? I believe you can use these health savings accounts into retirement, right? So it's something that's typically portable, meaning you don't have to use it all while you're an employee. You can go into retirement, probably still needs to stay with the plan, so maybe portable is not a good word, but the idea is that you could use it for future medical expenses. But if you're working and you're in a high tax bracket and you want to lower some of that taxable income, go ahead and set some of it aside in a health savings account.
Exactly. Just like a retirement account, when you're contributing to that retirement account, you receive the deduction. When you contribute to that health savings account, you'll receive the deduction.
Perfect. Yeah, so it's another good one.
Yeah.
What about number 4, Matt?
Number 4 is for our clients who have reached age 70 and a half, and they have a required minimum distribution out of their IRAs. So this is an interesting time in which people have realized that the IRS is wanting money to be pulled out of their accounts. And so sometimes they might not reach that full amount that they've been wanting to reach, or they want to find more creative ways to reach that amount. What they can do is what's called a qualified charitable donation. And so when you make a qualified charitable donation, you find a qualified charity, which is a 501(c). So it might be your church or a different charitable organization that you feel passionate about. And you can make a contribution directly from your IRA to the charity. Now, when you do that, the perk is you don't actually owe income taxes on that donation, which is great. Obviously, if we are trying to reach that required minimum distribution and it might be larger than they had wanted or anticipated on taking out, that way they're not going to owe extra taxes as well, but they're going to be able to benefit a great cause.
Yeah, especially if they can't itemize their deductions, right? So you don't need to itemize your deductions to be able to get this tax benefit from your charitable donation. So again, if you're over 70 and a half, so if you're in your 70s or your 80s and you're watching or listening to this and you have an IRA, the IRS may say, Matt, you need to take out $40,000 from your IRA this year.
Yeah.
And you might say, you know what, I don't need all that money and I don't want to pay taxes on all of it, but you know what, I give $5,000 a year to my church or whatever that may be. Well, you can basically direct $5,000 of that to your church, still satisfy some of your required minimum distribution and not pay taxes on the $5,000, but of course you'd still be subject on taxes on the other amount. But it's a big deal. And if you're not in your 70s or 80s or 90s or beyond and watching this, but your parents are, or your grandparents are, this is definitely a topic that you can bring to their attention. Matt's also written about this on his blog out there at Falcon Wealth Advisors under our content section. And certainly don't hesitate to give us a call. And we're happy to go over this with, again, your parents or grandparents that may be in their 70s, 80s, 90s, and beyond. They have these IRA assets and they're just paying taxes on these distributions, but they're still giving to their church. It could be $100, whatever it is.
Yeah.
They definitely could be lowering their taxes. That's a quick win and really a no-brainer.
Yeah. Just two common scenarios we see with that is people trying to reach their full required minimum distribution, or like you said, people who are already taking their distribution from their IRA and then giving to their church or whatever charitable contribution they're passionate about.
Right.
So if they know that they don't have to take out the distribution, pay the taxes on it, it'll be separate for them. So it's a great benefit.
Absolutely. Definitely a quick way to lower your taxes. And again, you want to do that before December 31st. So if you wait too long and you don't take out this required minimum distribution, the IRS forces you to do it anyways, and then I think they tax you 50% on it. So again, it's something you want to be very careful of and make sure that you're handling it appropriately.
Definitely.
All right, then number 5, going kind of to the other side of the pendulum here. If you have children or grandchildren, you can donate to something called contribute to something called a 529 plan, which is a college savings vehicle. And typically, again, depends on where you live, but it's our understanding that if you live in Kansas or Missouri, you can get a state tax deduction by contributing to this 529 plan. 529 plans need to be used for college or private school. So if your child goes to a private high school, you can use a certain amount of that as well. So it's if you have a state tax problem, you certainly can donate or contribute. I wouldn't say donate because we're talking about charities.
Sure.
You can certainly contribute to these 529 plans and be able to lower your state taxes.
Yeah.
So another good opportunity. Again, that's something we help our clients with at Falcon Wealth Advisors. We like to go direct to the 529 plans themselves, again, to lower the fees down a little bit, but that's definitely something we're happy to advise you on and help you get set up.
Yeah.
Perfect. So those are 5, again on the camera, 5 strategies that you want to take advantage of now or certainly take a look at. Now, again, while we're not CPAs at Falcon Wealth Advisors, we do not ignore taxes. Matt's here, reading about the tax codes every day. You're actually working on a certification as to be a tax specialist.
Yep.
So again, we want to do tax planning for our clients, and these are 5 things that you can do to lower that tax bill to Uncle Sam.
Which we like.
Yeah, we love that, right? Like Corey always says he doesn't want to pay a penny more than what he's supposed to Uncle Sam, which I think is a little harsh. But the idea is you don't want to overpay, right? Or if you can lower your situation and help your family in other ways, why wouldn't you do that?
Exactly.
That's the whole point of understanding it and being vigilant. So it's a big part of what we do for our clients, and we're certainly happy to help. And if you're a client and you're watching this or listening to this, give me a call. Absolutely. We want to set up a time to meet with Matt and myself. We're certainly here to help look at your taxes and see what we can do about helping.
Yeah.
All right, very good. So, Matt, it's been a while since you've been on the show.
Yeah, it's been a minute.
So I wanted to partake in another lightning round with you. So
Okay.
if you don't mind indulging me, we're going to do the bird of prey Lightning round sponsored by Falcon Wealth Advisors.
All right.
Now, this is an abbreviated version, and I don't think I've asked you these. Have you ever done a 5-question lightning round?
I don't think I have.
All right, so good. So this is a 5-question lightning round, so very quick.
Okay.
Right, only five questions. And I'm gonna read them off, and I just wanna get your initial reaction here, if you don't mind.
All right, here we go.
There is no prize for participating either.
Okay.
And we won't hold you to any of your answers either. All right, so are you ready?
I am ready.
All right, so we'll go ahead and start the clock and get going. Okay, so we're into the baseball playoffs. Who's going to win the World Series?
Unfortunately, not the Cardinals.
Yeah, they're out.
In Corey's case there, but I think the Nats are going to win.
The Nationals.
Yes.
All right, very good.
It's been a minute for them, so I'd like to see them win.
All right,
you know?
so the Nationals. So you're going for the National League, right?
Yeah.
Okay. I know you're not a Chiefs fan, but what is the Chiefs' record going to be? They're looking a little rough,
Well,
right?
they have 2 losses at the moment. I think that they'll end up with 4 losses total.
So 12 and 4?
So I think overall they're going to be pretty solid, yeah.
All right.
Yeah.
Perfect.
Unfortunately for my Broncos.
Yeah,
Especially after this last game.
Yeah, the last Broncos game wasn't that great. Okay, we're basically fast into fall here. What's your favorite time of year? What's your favorite season?
Actually, right now, I love when there's a crisp in the air and you can wear a jacket outside, but you can also wear shorts.
I guess. Are you that guy that wears shorts and a jacket?
If I'm golfing, I will.
Okay.
You know, so that I can take it off if I need to. But just the crisp in the air and the changing of the leaves, I think everyone's in a good mood as the holidays are approaching.
Okay.
So this is probably my favorite time of year.
Awesome. All right.
Yeah.
When will the next recession be?
That is a great question. If you ask CNBC, tomorrow.
Yeah, the news has been pounding the table with it a little bit lately. When do you think it's going to happen?
You know, at the moment, I think that so many different factors are changing constantly, like the yield curve and etc. But I think that there's so much talk of the recession that's looming that I think it's going to continue to drag out, and I don't think it's necessarily as close as people think. Now, obviously, that's just my opinion, and facts are facts that could change.
And again, we're not going to hold you to this.
Yeah.
So do you have 1 year, 2 years, 3 years? When do you think? Again, this is a pure guess, and no one's going to hold you to it.
I wouldn't say for the next year and a half.
Okay.
Yeah.
So 18 months plus. All right.
Beyond that, probably.
All right. And then my last question is, what's the best piece of advice? This doesn't have to be financially related. What's the best piece of advice you've ever received that just comes to mind?
Yeah, don't worry about other people's opinions and just be yourself.
That's a good one.
Yeah.
It's as you know, growing up as an adolescent, that was probably pretty heavy for everybody. Is what do your peers think, and what does Sally think of Tommy, think of whatever, right?
Sure.
But that's really good advice. So don't worry about other people's opinion, and just be true to yourself.
You can't truly enjoy yourself and who you're meant to be unless you worry about who you're supposed to be.
Yeah,
Right?
very good. Good for you. That's good advice. So, well, thank you. That's all we have for the Bird of Prey Lightning Round,
Yeah,
sponsored
thanks for having me
by
on.
Falcon Wealth Advisors. Yeah, of course. So that's enough for our show today. Again, we've got to wrap it up and get back to work, and I got to go play golf.
Sweet.
But thank you all for tuning in. As always, if you're watching this on YouTube, please subscribe and like our content and give it the thumbs up if you think it's worthy. If you're listening to us on iTunes or Spotify, we'd really appreciate a 5-star rating. And as always, you can find us out there on all the social media platforms, whether that's Instagram, Twitter, LinkedIn, or Facebook. And you can find me out there on Twitter if you're into that, at Jake Falcon, CRPC. And then, Matt, I think you prefer email to be contacted.
Yeah, especially if you have questions about what we discussed today in the tax planning. Matt at falconwealthadvisors.com is the best way to contact me, and I'm happy to answer any questions.
I know you've also been picking up your LinkedIn presence, so
Yes.
if you want to connect with Matt on LinkedIn, he'll be pushing out articles. And also for our clients tuning in, Matt has also been reaching out, just checking in, seeing if you had any questions as year-end tax planning comes. So be on the lookout for a phone call from Matt if you haven't talked to him already.
Yeah.
Perfect. Well, thank you again, and we hope you all have a great week.